Welcome to the BS Banking Show, Parag. Good to have you here. My first question is, credit card outstandings have moved in excess of 2 lakh crore. Do you think at systemic level, this is a cause for concern?
RBI has been talking about the overall unsecured space, which includes credit cards. Having said this, I think the overall unsecured space is more of the personal loan and the business loan category of products, which is significantly higher in terms of outstanding as compared to credit cards. I think the overall concerns on unsecured, which have been flagged off, I think are not really, I think they are proactive measures, if you may call so, seeing the kind of growth of the unsecured space over the last year and the trajectory which most people who are disbursing loans, I think the kind of run rate which is going. Okay, but credit cards is actually a much smaller part of this whole unsecured game, and I really don't see too much of worry in that space. For example, I think line utilizations on cards are still well within safe parameters. Incrementally, you're seeing the underwriting standards, of course, ever since the great global meltdown 2008, bureaus have started kicking in. There are multiple bureaus today. There are multiple other checks which issuers do. And the other factor is that if you notice in the industry over the last 4 to 5 years, you've seen overall revolve rates are slowly inching downwards, whereas the number of cards issued are going upwards. So a combination of all of these factors ensures that the right kind of underwriting is actually happening on the card space, and therefore I don't see any stress on credit card books.
Do you think, compared to debit cards, the credit card universe still remains at around 80 million cards?
Mm-hmm.
Do you think if there's a rethink on the merchant discount rate, acceptance could go up?
Well, let me put it this way. You made a statement saying that the number of cards are hovering around the 80 million rate. If you notice, the growth from 45 million cards just about 2 years back to 80 million cards, I think has been pretty consistently going upwards. You might have seen a sort of apparently or optical slowdown in the last, let's say, 7-8 months, but that is actually attributed to the new guidelines which came in last September. The RBI guidelines, which really talked about, ensuring that inactive cards, either on the newly sourced book or even on the portfolio, are actually sort of removed from the portfolio. And hence, what growth you see is actually a net growth, because there have been a significant amount of cards in the industry which have actually been closed because these were anyway not contributing to spends or the book. They were inactive in the portfolio. The second thing which is also attributed to card growth, the card-based growth going, is the introduction of the UPI and the RuPay card, credit card linkage to the UPI program. That in itself in the last 3-4 months has brought in a significant number of cards into the ecosystem. And so that spells, both these factors, as I say, spell a good omen for the growth of the card industry. And you'll see the numbers sort of going up again back to the earlier growth levels, post-pandemic growth levels. Credit card MDRs remain, okay? What you don't have credit MDR on RuPay debit cards alone. You have it on other network-issued debit cards. All credit cards, MDR is applicable. There is an MDR applicable even on the UPI link card program. And so therefore there is, I think, adequate enough leeway for growth in the system, given the first two reasons which I talked about. So I don't see that as a barrier.
Okay. Do you think the UPI credit line can by itself become a challenge to credit cards?
The opportunity for growth in the credit card space over the next coming years, next couple of coming years, is, I think, significantly large. One key factor is this RuPay card linked to UPI program. It offers in a very seamless way issuers to be able to give access to close to 300-350 million transacting customers on the UPI platform, which is a direct-to-account platform. And therefore, the linkage, this program linkage actually brings to those 350 million people, okay, the opportunity to overlay credit on top of the UPI rates. Now, this in itself, brings together a great opportunity for growth in the credit card space. In a similar way, okay, if you look at it this way, the UPI credit line program, UPI credit as we call it, itself will also open up significantly the opportunity to overlay credit on it. Credit cards ultimately will never be able to target the entire 350 million, but a significant proportion of good customers on this line, people will take credit cards. But the UPI credit line is a much simpler program in that pre-approved lines of banks are sort of linked to the UPI, and customers can on the fly avail of credit through those pre-approved lines onto their consumption patterns. So in the same sense that I talked about the UPI linked credit card program expanding the opportunity significantly for new issuance of cards, in the same way, we see that the UPI credit program only expanding the opportunity for credit. It is still vastly under-penetrated. So you'll have two programs effectively running on the UPI rails. One is the credit card linked program and one is the pre-approved lines linked program. Okay. So as I see it in the near future, I'm not talking of outlier situations where there could be some cannibalization, but I think overall the market will expand significantly.
And lastly, do you think that with the merger of the HDFC twins, cross-sell can be upped in a big way?
Of course. The penetration, if you were to sort of put the basis together, the penetration of the respective products, whether it's the bank accounts, I'll take one example, bank accounts on the limited base, the home loan mortgage base, and similarly the mortgage on the bank customer base. I think the numbers are in the low 20s, 20 to 30% region. Okay, so we've got a 70% kind of opportunity available to cross-sell. And like I said, it's first, of course, the primary products of an account, banking account, and then the mortgage. But then when you expand it to all the other categories, in fact, some of the other products, the categories are much lower kind of penetration levels, credit cards being probably the highest. Okay, so absolutely. One of the key strong rationales of bringing together and having a combined customer base today, as we speak of almost 80 million plus customers, is exactly the opportunity to cross-sell. And that obviously gives us a significant opportunity to deepen relationships, overall enhance the banking engagement of customers with HDFC Bank, the merged entity.
With fintechs having vacated the unsecured space, does it open up an opportunity for players like yours?
Well, obviously in an ecosystem where there are players, and if a reasonably large portion of people vacate the space for whatever reason, I think, yes, the opportunity lies up. And I think in it itself, it resolves the issue or the concern which I think the regulator was voicing. And the rationale for this action which they've taken was exactly that, to say, hey, we have no problem or issues with growth, but we expect players who are playing in the liquidity space to sort of, lend maturely so that, you don't create overt bubbles or hotspots within the larger ecosystem. And so to that extent, obviously, I think the opportunity for banks in this space, regulated entities as we call them, is quite large in that space.
Mr. Rao, it was good having you on the BS Banking Show. We look forward to having you sometime soon again. Have a good day.
Thank you very much, and thank you for having me on the show itself.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.